Friends, in this video for ithought Advisor, I'm going to talk to you on the topic, is debt investing 2023's dark horse? In 2022, how many of us believed that gold would be the best performing asset class? Yet, there were enough people who believed in gold. But that belief was a traditional one. Those who believed in modern investing refused to look at gold because of recency bias. And everybody was of the view that investing in equity, especially in the aggressive parts of equity like small and mid caps, was the way to go. The outcome was completely to the contrary. And gold was the surprise winner of 2022. Investing in only one asset class and predominantly pushing all your savings into one asset class is a mistake Indians have done for a very long time. It used to be in gold at one time, it used to be in deposits at another, and it has been in equity in recent times. No one asset class should be dominating your overall investment portfolio to that extent by which it impacts your overall returns significantly and raises the risks in your portfolio to levels which you cannot tolerate. The only way this can be avoided is by looking at asset classes which are out of favor and investing in them gradually, building an investment exposure in them when they are out of favor, so that you will get better returns when that asset class performs. Anybody who got it right in gold last year has definitely done that. This year, it's important to gradually build your exposure in a beaten asset class which is completely out of favor, despite seeing a recent trend of rising interest rates. Most people think that the returns which they are able to get from debt presently are not attractive enough. What are they comparing with? They seem to be comparing it with what equity did during the previous 2-3 years. So the 3-year, 5-year return in equity is being used to convince you that it is not worth looking at debt investing. I think this approach is a bit creative and flawed. You need to find ways to sidestep this bias and look at debt investing objectively. If you are not sure till what extent rates will rise, you should use that lack of clarity to build your investment as you go along. But doing nothing and simply watching is not an option. There is a likelihood of interest rates peaking out this year and probably even seeing the first dip towards the latter part of the year. If that happens, then the window of opportunity to invest in debt would have been firmly shut by that time. So investors who want to bet on an out of favor sector now in order to benefit from a change in the market mood towards the end of the year need to take a more open and nuanced view towards debt investing. This year is very critical, and if you miss out on this year, you're not going to get that opportunity anytime soon. So debt investing could be the dark horse of 2023, and it's something you should consider for your portfolio. Thank you for watching this video.